Hello learners, today we will discuss the meaning and features of income in income tax. Income tax is charged on income of a person. Income is not defined in the Income Tax Act, but the following are included in income, like profit and gains, dividend, voluntary contribution received by a trust. Trust may be created for religious or for charitable purposes. This contribution may be received by a scientific research association, sports association or institution, any university or any educational institution, any hospital or institution, or an electoral trust. Value of perquisite or profit in lieu of salary. Any special allowances other than perquisite specifically granted to assessee to meet expenses wholly or exclusively for the performance of official duties. Any allowance granted to assessee to meet personal expenses at the workplace or to compensate assessee for increased cost of living will also be considered as income. Any value of benefit or perquisite provided to representative assessee, any income which is chargeable under business or profession, any amount which is chargeable under capital gains, any profits or gains of mutual insurance company or cooperative society for carrying on insurance business, any winnings from lotteries, crossword puzzles, races including horse races, card games or other games, or any sort of from gambling or betting of any form or nature. Any sum received from Provident Fund or Superannuation Fund or any other fund set up under the Employees State Insurance Act or any other fund for the welfare of employees will also be a part of income. Any sum received under keyman insurance policy including bonus, any sum of money or value of property received by an individual or by HUF without consideration or with inadequate consideration, any aggregate amount exceeding 50,000 rupees in a previous year received by an individual or by HUF, whether in cash or in the form of property from non-relatives, any sum of money received as an advance for the transfer of capital asset. If such a sum of money is forfeited and negotiation does not result in transfer of capital asset, then it will be a part of income of assessee. If any assessee receives subsidy or grant or cash incentive or duty back or favor or concession or reimbursement in cash or in kind from central government or from state government or any authority, body, agency, it shall be treated as income. However, LPG subsidy and other welfare subsidies received by individuals shall not be included in the income. Now the concept of income. Income means a monetary income which is derived from some definite source. It may be regular income or it may be irregular income. The definite sources can be income from salaries, income from house property, profit and gains of business and profession, capital gains, and income from other sources. Features of income. There should be a definite source of income. Source means there must be income must be originated from a specific source. In income tax, income earned whether legally or illegally shall be taxable. If any expenditure incurred to earn income which is illegal, then such expenditure shall be allowed to be deducted out of such income only. Income earned may be a regular income like weekly, monthly or quarterly. If any lump sum income received, it can also be considered considered as an income. Income should be received from outside source, which means that one cannot earn income from himself or herself. For example, an employee working in an educational institution gets a salary will be considered as income as it is earned or received from outside source. But if a club member made contributions for mutual benefit and after meeting certain expenses, the balance left will not be considered as income because it is not received from outside source. Income can be received in cash or in kind, or it may be in the form of service. In kind means in the form of facilities or amenities. It will be converted or valued according to income tax rules, or in certain case, if no specific rule is there, then the value is to be made according to marketplace. The disputed income is also taxable. Disputed income is that where the title or ownership of property is not clear. The decision of case is still pending in the court, but the person who is receiving income shall be chargeable to tax till the decision of the court arrives. For example, there is a dispute regarding the title of house property among Mr. A and Mr. B, but the property is in the hands of Mr. A and he is receiving rupees 5,000 per month as rent from that property. Now, for income tax purposes, Mr. A shall be assessable. If later on the court's decision is in favor of Mr. B, then as and when Mr. B starts receiving the income, then he will be assessable for taxation. Income, whether received or accrue or arise, shall be taxable. An assessee can pay tax either on receipt basis or on the basis of accrual. If assessee paid tax on accrued income, then once he or she is charged to tax, he or she will not be liable to pay tax on the same income again. Otherwise, it would be a case of double taxation. Income tax is a tax on income and not on receipts. This is very important statement. Sometimes question may be based on this statement. For example, if PIN money is given to family member, or wife received money from her husband for household expenses, will not be considered as income in the hands of family member or in the hands of wife, because this money or income has not been earned by them. It is merely a receipt of income. Similarly, Stridhan received by female will not be treated as income in her hands, hence not included in her total income and not taxable at all. Any income received in the name of Gaushala or on the name of Dharmada, etc. shall not be an income. Now, diversion or application of income. Diversion and application of income is the deciding factor for tax liability of a particular income. If income has been diverted, then there shall be no tax liability. But if the income has been applied or spent by recipient, then that recipient shall be liable for income tax. Diversion of income means the income which is diverted under some legal obligation to other person, or it may be wholly or partly diverted to other person voluntarily, means that this income does not reach to the original recipient or assessee. When this income is given to other person after its receipt, it is called application of income. When income is diverted voluntary to other person, it is called application of income. And when income is diverted under some obligation, it is diversion of income and not liable to tax. Under certain legal obligation, a charge is created on the income of a person. The amount to the extent of charge shall not be treated as income because it is a diversion of income, hence not taxable. For example, Sarla and Vimla supplied papad to a grocer and the grocer agreed to pay rupees 2,000 each of them as consideration after 10 days. After 10 days, Sarla collected rupees 4,000 from grocer. In this case, only rupees 2,000 will be Sarla's income. This rupees 2,000 will be included in her taxable total income, but remaining rupees 2,000 which belongs to Vimla shall be diverted to her and hence taxable in the hands of Vimla only. In short, we can say that If amount is paid or payable under certain legal provisions, then it is called diversion of income and not taxable in the hands of payer. Whereas if such amount is paid or payable voluntarily or by your own choice or will, that is without legal compulsion, then it is called application of income and taxable in the hands of original recipient. Income can be positive or negative. If the income is positive, it means profit or cash inflow is there. But if income is negative, it means loss is there, and in income tax, losses are also taken into consideration in order to take the benefit of carried forward and set off losses from incomes. Now, it's a time for assignment. Write a question, write an answer for this question. Income tax is a tax on income and not on receipts. Explain this statement and also discuss the essential features of income. You have to write short notes on income and diversion and application of income. Thank you very much. Have a nice time.